Eithne Treanor, and welcome to this oil market update, the first of many from Pipeline Oil and Gas News. The oil market got off to a strong start in 2019 and maintained that momentum right throughout the first quarter, up around 40%. The fundamentals are strong as OPEC Plus agreement has succeeded in keeping 1.2 million barrels a day off the market. This adjustment is helping to balance a market that was oversupplied, but it's also helping to keep prices steady. There's been a series of economic and geopolitical influences on the price all year, and as we close April, the American president has announced full implementation of the US sanctions against Iran and the removal of waivers from a variety of countries that were still importing oil. The market, of course, reacted swiftly on this news as it fears a tightening market, sending oil prices higher, with Brent close to $75 and WTI above $66 a barrel. The response from Saudi Arabia's oil minister was that he and other oil producers would watch the oil market closely and consult to make sure that, as he said, the global oil market does not go out of balance. He emphasized that stability was to the benefit of producers and consumers alike. April exports from Iran were around 1 million barrels a day, down from the 3 million barrels a day before the sanctions were imposed. Other geopolitical hotspots impacting the oil market continue to be Libya and Venezuela, as exports remain restricted. Predictions for global economic growth will, of course, impact oil demand. And while institutions like the International Monetary Fund has warned of a global slowdown, we're seeing many economies are still performing well, with first quarter growth that was obvious in China and indeed the US. Meanwhile, oil demand appears to be holding up, but the International Energy Agency warns of demand destruction if the price stays above $70 a barrel for too long. Global stock markets have improved, and the Federal Reserve is keeping its promise to be more patient. The US-China trade talks are still to be resolved, but tension has certainly eased in recent weeks. Now, while OPEC and friends have cut back exports, the United States continues to produce at record levels. The U.S. Energy Information Administration on data shows that oil production at 12 million barrels a day, making the U.S. now the biggest oil producer in the world, overtaking Saudi Arabia and Russia. But of course, not all crude is created equally. And with the majority of U.S. exports of the lighter sweet variety, the demand, of course, is for heavy crude, and that's coming from a lot of refineries. It's still strong. The current state of demand and supply, of course, will be top of the agenda at the next joint OPEC-non-OPEC Ministerial Monitoring Committee meeting. And this will be held in Saudi Arabia in mid-May, where key players, including Russia, will study the data and make recommendations. In the meantime, the impact of the sanctions decision will weigh heavily on the market, and particularly on OPEC, as they look forward to the June meeting with the production adjustment agreement that is still in place. This has been the oil market update, coming to you from Pipeline Oil and Gas News.